AI is an extremely centralizing force.
Hmm.
So back in 2018, I went to a presentation by SVB, Silicon Valley Bank, and they just showed like all the global AI research centers, and it's
Hmm.
pretty much all like US and China for the
Yeah.
most part. And I'm like, man, like it's just going to be hard building an AI company unless you are one of the big corporations already. I think DeFi and crypto and so on, building on Bitcoin, it's all like it's very open. But the problem with Bitcoin Fi or Bitcoin traditionally has been like, how do you do it safely? Because when I came into the space, boom, Celsius, BlockFi, FTX, like things just sort of blow up left and right. And there's sort of two main ways that Bitcoin can be used, and both of them have their issues. So the approach that most people are familiar with, or anyone who's heard about WBTC by BitGo, is use a custodian, or CBBTC by Coinbase
Hmm.
is you use a custodial model. You send your Bitcoin to a custodian, and they're like, "Hey, trust me, I won't fail, I won't lose it." And Coinbase historically has been very trustworthy. BitGo has been trustworthy. But anyway, you basically send your not your keys, not your Bitcoin. You send your Bitcoin
You're
to one
trusting a third
entity.
party, essentially, is what you're saying, to custody. There's a couple levels of risk there, right? So you're trusting the protocol, or you're trusting the company or individual that's backing it, not to lose or squander. And historically, this has not played out well. Not saying that there's anything wrong with CBBTC or Wrap Bitcoin. I mean, they've
Sure.
both been functioning and working just fine, but you never know, right? To be able to do it with smart contract, I guess what you were using is these discrete log contracts. That to me is really interesting. That's powerful.
Basically, we invented a third way to do this because
Hmm.
we're like, well, neither the custodian nor the bridge models like actually going to work out super long term.
Hmm.
But what if you could? Where's the only thing that is big enough and safe enough to custody your Bitcoin, and it's Bitcoin itself, right? Like it's Bitcoin L1,
Hmm.
not an L2. That's like another thing that's also a bridge. But
Hmm.
like, what if you could lock your Bitcoin on Bitcoin, and then use it elsewhere? And that's what, like I said, we didn't invent this concept. Taj Strija at MIT did 6 years ago, but basically he proposed this concept called the discrete log contract. You mentioned DLC, and basically the DLC is like it's just a way to have like a if then statement on Bitcoin,
Hmm.
where the condition is evaluated through an off-chain entity called a DLC oracle. And I guess without going super deep, it's just a way to add conditional payments logic to Bitcoin.
Hmm.
And so what you can do with it, which there's a couple of DLC teams, they did different designs, but what we did with it is, what if you send the Bitcoin to yourself? What if you just lock it with yourself? You move your Bitcoin into a multi-sig that can only pay out to you, and that is enforced by Bitcoin L1. And it's literally mined by the Bitcoin, network. And so that was like the aha moment. We call it self-wrapping. But basically, if you wrap Bitcoin with yourself, then no one can steal it, even if there's a hack, collusion, whatever. Somebody kidnaps me, somebody kidnaps you. Nobody can take whoever holds the keys, whoever made the deposit. Those keys get the Bitcoin back, and that's what we built IBTC on. So we basically invented a safer way to wrap Bitcoin to use in DeFi for investment purposes.
Welcome back to another episode of CypherPunk'd, where we explore money's history, crypto's future, and Web3's role in advancing human rights, freedom, and digital liberty. Today's guest is reshaping how we think about Bitcoin's utility in DeFi. Aki Balogh, co-founder and CEO of IBTC, the only wrapped Bitcoin secured natively on Bitcoin's L1. Aki's journey is fascinating, from building Market Muse, an AI-powered content platform acquired by Site Improve, to advising El Salvador's Chivo wallet project. Now he's pioneering bridgeless DeFi for Bitcoin through IBTC, backed by major players like OKX, Ventures, and Chainlink. His mission: to unlock Bitcoin's massive untapped potential in DeFi without compromising on security. With over 140 billion lost to bridge hacks, Aki and his team are building what could be a game-changing solution for Bitcoin holders worldwide. Aki, welcome to the show. Talk to me here. So you were involved a little bit in AI, and tell me about Market Muse, and then you kind of transitioned over to Bitcoin a little bit. What made you pivot?
Yeah, yeah. In 2011, I learned about Bitcoin, And I'm like, oh, this thing is really cool. I'm like, I should buy some. I have $3,000. So I'm like, okay, I should first, I'm like, I should just buy all Bitcoin with it. Bitcoin was under $1 at the time. And then I'm like, but wait a moment, I wanted to like leave venture and start a startup. And I'm
Mhm.
like, I should probably invest into myself because, that's what you should do. And so I put all 3 grand into myself, and it did get my startup launched. But yeah, but I can only look back with regret on that day.
It's very
And
hard to
and the
outperform Bitcoin.
lesson to be learned, because I tell this story a lot. Obviously, I now I work with institutional Bitcoin holders in Wales like every day, and I get reminded of that time I could have gotten 3,000 Bitcoin myself.
Oh, man.
But looking back, my this is my only regret, and the regret is that I framed it in terms of like A or B. It should have been I can do both. I can do
Yeah.
$500 in one and 2,500 in the
There
other.
you go.
So anyway, that kind of ties to the story of like you should
Mhm.
have multiple interests and diversify
I love
because
it.
you never know.
I
But
love it.
but yeah, I did go down an AI route. I invented a way to use machine learning or AI to optimize content for search. And I'm like, oh, that's interesting. What's all this, decentralized money stuff? And I was pretty indifferent. I looked at Bitcoin and ETH and Solana and everything, and then I just decided to focus on Bitcoin. The quality of the code, the quality of software, it just seemed like a stable, like kind of like a lower risk place to build a company. And this was 3 years ago. Nowadays, I mean, Bitcoin Fi is all over the crypto Twitter. But 3 years ago, it wasn't sort of obvious. And yeah, and I started this company to make that a reality. And I guess the one piece of it, I'm not a cryptographer. I mean, I've been writing code for years. I've been in sales, marketing. I can code in 14 languages at last count. But so I love computer science, but I'm definitely not a hardcore cryptographer. Like that's another level. So instead of kind of creating something of my own, what I did was I found some IP that had been ignored. And so basically 6 years ago, the creator of the Lightning Network, Tad Strija, he was at MIT. And right before he published the Lightning white paper, he published a white paper on discrete log contracts, DLCs. And I'm like, well, wait a moment, what is that? And so I started DLC Link in partnership with Chainlink to bring DLCs and safer Bitcoin finance to the world. And so it's been 3 years on that journey.
Yeah, I think you're onto something there. I think
Hey,
that,
turns out like, yeah, there's, over $1 trillion of Bitcoin. And if you can invest and get just 5%, I mean, that's a lot of billions of
yeah.
dollars, for sure. But if you invest your hard-earned Bitcoin into like a bridge and it's hacked and you get wrecked, then
Mm.
that sucks. So that's the problem we're trying to solve.
Wow. Thank you for the intro. So many rabbit holes to go down. I'm gonna have to pick your brain on a lot of stuff, starting probably with the AI stuff because
Yeah.
we've kind of been in stealth mode, but our background as a company is we're mainly like a mining company, right? So we have a lot of our own, Bitcoin ASICs, but also a lot of GPU servers that we've historically used to mine,
Mhm.
and that's not many people have thousands of GPUs at scale in GPU mining per se in the Web3 space anymore, but so we are exploring doing some AI and compute stuff. So that's in our
That's
pipeline
awesome.
right now. Um,
That's really cool.
so I'd love to pick your brain about that later. But tell me about tell me about the Chivo wallet a little bit. So what's going on with that? Is that still before we really get into the meat of IBTC? Let's talk a little bit about that. I heard recently that they made some concessions to the IMF, so it's not. Are people still using the Chivo wallet? Can you explain a little bit about that?
Yeah, I heard it too, and I wasn't directly involved. I wasn't there. I just heard kind of the updates from my friend when they were building it. I'm not sure how much I can say, so I probably shouldn't say much. But it was like a secret government project, let's just say at the
Hmm.
time, like a skunkworks kind of thing. Yeah, maybe I shouldn't say more. But yeah, I guess the thing with Chivo is that because I went down to El Salvador after it was shipped, and I kind of checked out their use of Bitcoin. I think that People were using it, but not for the Bitcoin side. They were using it just for the stable coin side. And there was like an initial offer, like you got like $20 or
Hmm.
something. And so everybody got it for that. But El Salvador in Bitcoin, Bitcoin in El Salvador is definitely a big deal. I mean, they've got the volcano bonds, they've got
Hmm.
their reserve, like, and so I think Bitcoin is more of a geopolitical thing. It's more for and kind of more for institutions. Like, at the end of the day, we people who are listening to this are probably sophisticated retail users, but most people are kind of like my dad. Like,
Hmm.
he gets like the high level, but he's not gonna dig deep, and he can't really do due diligence on, like, what the best whatever. And so, like, people count on institutions, although the nature of Bitcoin, of course, is against like central banks or to have an alternative, but you still need kind of financial institutions, to build out that system. Just as financial institutions need to be fluent in, Bitcoin investing and stuff. So that, I think, El Salvador, although it did get started with like this kind of retail side and like, hyper Bitcoinization, it didn't really go down that side. But as far as I know, El Salvador still has their Bitcoin. It's netted them gains.
Hmm.
Bukele went through a lot of kind of ridicule over the years, and he came out ahead. And
Yeah, I think he's
and
I
I
think he's had the last laugh at this point.
definitely, yeah. And I mean, we're even just getting started. Like, I mean, I imagine Bitcoin's going to keep going up. I'm not financial advice, but I feel like there's more left in it. So I think it's going to be a very wise investment.
Hmm.
And now, like, we're talking about, strategic reserve in the U.S. and other countries too. Like, this is, yeah, I think Bitcoin is a very I think it has a lot of, it might not be hyper Bitcoinization in the way that people imagined, like how Trump was buying a hamburger. Like,
Hmm.
that might not be like where it actually plays out, but it might even play out in, arguably, I would say, a more important venue as being a strategic reserve currency for the
Yeah, I mean,
world,
I
which
I
is,
definitely see nation states coming in, wading into the pool and adding it as a treasury reserve asset. And the thing about Bitcoin is it's so many different things to so many different people, and it has all these fundamental characteristics that somebody who's in Bitcoin, who's in El Salvador on lives in Bitcoin Beach, can use that for daily purchases as money right on an L2 or something, and nation states can put it on their balance sheets, right? Companies can put it on their balance sheets. Someone like you
yeah.
and I can add it to our portfolio and have it as a sort of like a long-term savings account, right? Where we know we're not going to get debased. So, same thing with your dad, right? He could add it to his portfolio, and I'm sure he already has if you're his son. So,
Yeah,
you
yeah,
know,
yeah, definitely. And the fact, I didn't have to talk him into it. He kind of learned. And in fact, over the holidays, my brother's also in finance, and my sister-in-law runs a hedge fund. And I'm like, oh, I'm just gonna send dad some Bitcoin every month for his savings. And my
mhm.
brother's like, yeah, but no, I don't think he's gonna understand how to do that. Like, it's technically hard. And I'm like, no, no, no. Like, dad's been doing this for like 2, 3 years
Yeah.
on his own. In fact, he asked me how to create wrapped IBTC, and
Mm.
then I'm like, okay, dad, I'm gonna have to like like kind of like give you a longer explain, but he can still figure it out. So yeah, but I think what you said about institutions holding it on their balance sheet and corporations, I
Mhm.
think that's, I mean, obviously I'm biased because I only talk to institutions for the most part, but I think that's where this is going,
Yeah.
because it just has novel security characteristics that even ETH doesn't have.
Mhm.
Um, and that it's in a special place. Plus the whole mining network. Um, you
Yeah, it
guys
has
have,
that.
sounds like, a lot of miners. I have
Yeah.
a couple of miners, but just the fact that anyone can participate in that mining network
Yeah, you
is
can plug
very
right in.
cool too. So
I
it's
think it's proof of work is an interesting concept. It's this idea that that adds this cost of production to the asset. It adds this security element. And anybody can permissionlessly participate, right? And the miners, ultimately, the miners and the nodes work together and basically keep the network safe and control the network. It's very different than proof of stake, right? With Ethereum, and
yeah,
again, I have exposure to all these different assets, but there Ethereum lost something special when it made that swap from proof of work to proof of stake. And now I think proof of stake is it's the status quo of the system that already exists, right? Like those who have the power and have the stake, right? The more stake you have, the more essentially control you have in a lot of ways, right? So with proof of work, it doesn't matter how much Bitcoin the United States government buys or how much Michael Saylor buys. That gives them no more control than anybody else, right? It gives them
yeah,
the same amount of one node, one CPU, one vote, essentially, they have no more control just because they own the asset. And I think there's something very powerful about that message, right? It's kind of the fairest the fairest best system we have, right? Maybe it's not perfect, but it's better than the status quo.
Yeah, definitely. And I heard something like Abu Dhabi wants to own like 15% of global hash rate. And so it's actually the mining that is becomes strategic, like ownership and wealth and whatever is great, but the control of mining policy, like that ends up being what where nation states can compete. So
Mhm.
I think, yeah, I just it's a very cool, yeah, like you
Yeah.
said, it's the best technology for, people have the, when I got into it too, people are asking me like, what, well, but it, uses so much electricity and blah, 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 and pollution. It's, yeah, but what value does it provide?
Mhm.
And I think people, and it took me a while to understand the
Yeah.
value of Bitcoin is security. It provides
Yeah.
security
What
of
is what
assets.
is the value of a globally decentralized permissionless money that anybody in the world who doesn't have access to a bank account or doesn't have access to identification or lives in a third world country or lives under an authoritarian regime or just doesn't want to get excluded from the global community of, countries, right, at the country level, right? Even like, there's no sanctions with Bitcoin. There's no, you know what I mean? Like if you control the mining hash, like, you can make sure your blocks, if you have 1% or 2% of the global miners, right, you can guarantee that your payments are going to get into those blocks, right? You might, like when you said, did you say the Middle East, they want to control 15%, or was it
Abu
Dubai?
Dhabi,
Abu
yeah,
Dhabi. Yeah. Yeah. I
15%.
mean, I've
Yeah.
got miners in Abu Dhabi, right? We've got miners over there. So, you know, I've got miners all over the world, right? It's like there's this game theory behind the network where it's like this arms race where everybody's competing and,
Mhm.
the miners are seeking out the lowest cost energy, which just so happens to be green energy, just because green energy produces, it's once you set it up, that solar panel or whatever, it just sits there and it produces energy,
Mhm.
right? And the people that are deploying that infrastructure, they need a way to monetize it, right? And what better way than somebody who's going to come and buy your energy 24/7, right? So it's just kind of a match made in heaven there. But yeah, every country is
Yeah.
going to aspire. I think it's going to become strategically important to have some of that mining infrastructure in your country, right? and that
Yeah.
and that makes it so not only no one country or one place in the world is going to control all of that, right?
Yeah, yeah, and you pointed out kind of the people who benefit from this, of course, institutions and corporations and so on, and they're they have a profit motive, and that's a big part of it, and we focus on that, but who also benefits are the people in third world countries, where it's like, what's the value of not losing all your
Mm,
money?
yeah,
Like in Argentina, three times in a
yeah.
row, there's people who have seen all their savings be literally stolen by their
Venezuela,
government.
Zimbabwe. I mean, it's
um
just the story is as old as time, right? These fiat currencies eventually, historically, always fail, right? At some point, there's mismanagement and there's a lot more of it than people expect. So, you know,
yeah,
a way to
yeah,
park your savings in an asset, in a money that has to follow a rule set, that how many coins are ever going to exist. This concept of absolute scarcity, that there will only ever be 21 million Bitcoins. I think that's a powerful thing. That's a powerful concept. And I think in 2025, my biggest prediction for this year and the next is I think nation states are going to teach the world what absolute scarcity actually means, right? Because I don't think
mhm,
there's really not many things that are absolutely scarce, not many assets
mhm.
that are absolutely scarce. And I think Bitcoin is one of those. It is the first discovery of that concept of absolute scarcity, and people just don't understand that. People don't quite get it. And I think that even after 15 to 20 years of Bitcoin being the best performing asset in all of human history, I think we're still very early. Many people still don't understand, but that network will show you. It will reflect that scarcity in price, which will create this viral feedback loop, which we've seen over and over and over again. And I think
Yeah,
once nation states wade into that pool, it's going to be a different ballgame.
yeah, definitely, definitely. So yeah, so long story short, that's why, I mean, AI was like the coolest thing, and I think still has is
Mhm.
one of the top three coolest things, but the other one is Bitcoin specifically. And maybe I'll do a next company where I combine the two interests. But
Mhm.
anyway, I was like, I gotta like study into this thing
Yeah.
because it is yeah, and the other thing with AI is an extremely centralizing force.
Mhm.
So back in 2018, I went to a presentation by SVB, Silicon Valley Bank, and they just showed like all the global AI research centers, and it's
Mhm.
pretty much all like US and China for the
Yeah.
most part. And I'm like, man, like it's just going to be hard building an AI company. unless you are one of the big corporations already. So I think DeFi and crypto and so on, building on Bitcoin, it's all like it's very open. So I just that was another part of my thesis when deciding to because when you build a startup, you're doing it for 10 years. So I that was like I just dedicated my next decade to this specific project.
Mm. All right, let's move along and let's talk about IBTC, which is your main focus right now. So earlier you mentioned first, I guess first, tell us what IBTC is. Tell us what wrapped Bitcoin is, so people understand. You know, I think a lot of people are like, "Oh, wrapped Bitcoin, what the hell is that? What does that even mean? Why do we need wrapped Bitcoin?" Give us the
Yeah.
thesis.
Yeah, definitely. So with Bitcoin, I mean, you can hold it in cold storage, which a lot of people choose to do, which is great. But if you want to invest it, and so retail users may or may not, honestly, like you might just want to hold it and not take risks. But
Hmm.
institutions and trading firms, especially asset managers, etc., they're always trying to offer ways to maximize the yield on it, right?
Hmm.
They look at this as digital gold that is an investable asset that can be profitably used. And there's like kind of a range of estimates, but we could say conservatively, if you just get 5% per year,
Hmm.
year over year, that's a compounding. That's over, like, as you hold it for whatever generations, you can end up 3 5 10xing your value by doing that
Hmm.
versus not. So there's just this sort of compound interest that
Yeah, compound
um
interest. What is it?
it makes
The
sense
11th
to.
wonder of the world.
Yeah,
But imagine
totally.
that in Bitcoin, right? Like 5% more Bitcoin per year is significant, right? Um,
It adds up, and
mhm.
especially for very large institutions, foundations, and but even for smallholders, I mean, whatever. Yeah, like you said, it's a eighth wonder of the world. But the problem with Bitcoin Fi or Bitcoin traditionally has been like, how do you do it safely? Because when I came into the space, boom, Celsius, BlockFi, FTX, like things just sort of blow up left and right. And there's sort of two main ways that Bitcoin can be used, and both of them have their issues. So, the approach that most people are familiar with, or anyone who's heard about WBTC by BitGo, is use a custodial, or CBBTC by Coinbase,
Mhm.
is you use a custodial model. You send your Bitcoin to a custodian, and they're like, "Hey, trust me, I won't fail, I won't lose it." And Coinbase historically has been very trustworthy. BitGo has been trustworthy. But anyway, you basically send your not your keys, not your Bitcoin. You send your Bitcoin
You're
to one
trusting a third
entity.
party, essentially, is what you're saying to custody. It's like, you bring your car to a valet, you give them your car and they give you a claims ticket, right? And then, you think you can go back later and give them that claims ticket and say, hey, give me my car back. Similar thing with wrapped Bitcoin. Can you just explain what wrapped Bitcoin is? Why do I need wrapped Bitcoin as opposed to why can't I just use regular Bitcoin?
Oh,
Explain that
sure. Yeah.
for our
So
users.
if you want, so wrap Bitcoin lets Bitcoin be used in DeFi on
Hmm.
various chains like Ethereum or Solana or whatever.
Hmm.
And like, why might you want to do that? Well, if you're focused on, if you're afraid of centralization risk, you might want to use your Bitcoin to like take a loan, take some stable coins against it, invest it, or any kind of investment or lending activity. You might want to use DeFi over CeFi.
Hmm.
Like if like for crypto, you can trade Bitcoin on Binance and stuff, and many do. But if you want to use it in, let's say, Aave, because it's a peer-to-peer system, with smart contract risk, and you're able to assess the smart contracts. Long story short, you might get
Hmm.
better, might get a access to a better financial product on DeFi over CeFi. But because Bitcoin doesn't talk to Ethereum, you need to quote unquote wrap it. So you need
Hmm.
to take your Bitcoin and somehow get it onto Ethereum. And that's where basically there's two ways to do it. One is you have to trust a custodian not to lose it. That's like option one. Option two is what's called bridging, where you send your Bitcoin to a collection of nodes run by somebody else's project, and then they hold it and they promise not to lose it. And they, if they steal it or something happens, then it's gone. And what kind of struck us with both of these models is it's not your keys, not your Bitcoin. Like if you have to send your Bitcoin, you take the world's most decentralized asset, and you have to send it to like one person or to a couple of nodes run
Hmm.
by one person,
Hmm.
like neither is really like a great
It's
solution,
not
and
ideal.
neither
There's
will
risk.
like really scale
You
to
know,
Bitcoin.
there's a couple levels of risk there, right? So you're trusting the protocol, or you're trusting the company or individual that's backing it. Not to lose or squander. And historically, this has not played out well. Not saying that there's anything wrong with CBBTC or Wrap Bitcoin. I mean, they've
Sure.
both been functioning and working just fine, but you never know, right? So
Yeah.
um, to be able to do it with smart contract, I guess what you were using is these discrete log contracts. That to me is really interesting. That's powerful.
Yeah. So basically, we invented a third way to do this
Hmm.
because we're like, well, neither the custodian nor the bridge models like actually going to work out super long term.
Hmm.
But what if you could? Where's the only thing that is big enough and safe enough to custody your Bitcoin, and it's Bitcoin itself, right? Like it's Bitcoin L1,
Hmm.
not an L2. That's like another thing that's also a bridge. But
Hmm.
like, what if you could lock your Bitcoin on Bitcoin? And then use it elsewhere. And that's what, like I said, we didn't invent this concept. Taj Drija at MIT did 6 years ago, but basically he proposed this concept called the discrete log contract. You mentioned DLC. And basically the DLC is like it's just a way to have like a if then statement on Bitcoin
Hmm.
where the condition is evaluated through an off-chain entity called a DLC oracle. And I guess without going super deep, it's just a way to add conditional payments logic to Bitcoin.
Hmm.
And so what you can do with it, which there's a couple of DLC teams, they did different designs, but what we did with it is, what if you send the Bitcoin to yourself? What if you just lock it with yourself? You move your Bitcoin into a multi-sig that can only pay out to you, and that is enforced by Bitcoin L1, and it's literally mined by the Bitcoin network. And so that was like the aha moment. We call it self-wrapping, but basically, if you wrap Bitcoin with yourself, then no one can steal it, even if there's a hack, collusion, whatever. Somebody kidnaps me, somebody kidnaps you. Nobody can take whoever holds the keys, whoever made the deposit. Those keys get the Bitcoin back, and that's what we built IBTC on. So we basically invented a safer way to wrap Bitcoin to use in DeFi for investment purposes.
Can you explain when you add the smart contract data there? And you guys have partnered with Chainlink on this. That's my understanding.
Chainlink's actually an optional component.
Okay. I'm
We
just trying to figure
built.
out how you
Mhm. How it
verify,
works.
how you can get your Bitcoin back if you bridge it over. Like, where does that data come from that's plugging into the smart contract? Because blockchains are great at operating within a system, right? But like the issue with blockchains is they can't really talk to the outside world very well, which is where projects like Chainlink and Oracles come into play.
Yeah, totally. And this is called like the Oracle problem,
Yeah.
which is not like an intractable problem. It
Hmm.
just means like if you use an external data source, you need to know like what that is, and you have to then trust the data source. We basically so I guess, and just to kind of keep it simple, so Bitcoin, let's say you're wrapping Bitcoin to Ethereum and you want to take a loan in Aave, and then you want to like do stuff with it, like let's say ETH is the goal. So how do you like so what normally you would bridge it, like you'd have like servers running there and they hold it. But like I said, if you send your Bitcoin, like you've sort of lost it. So if you so how do you like lock with yourself? So the way it works is, so we set up a 2 of 2 multi-sig UTXO on Bitcoin. You as a depositor hold one of the keys.
Mm.
And by the way, the you in this case, like the depositors for us are only institutions like banks, and I'll describe why later. But
Hmm.
just like we could just for now, for simplicity, just say you hold one of the keys. The other keys is held by a set of relay nodes that can read Bitcoin and Ethereum state. But
Mm.
what the DLC adds is it adds this pre-signed condition. So basically, when you deposit the Bitcoin, you pre-sign your key, your output address, your wallet is the only output from that UTXO. That's what the DLC invention sort
Hmm.
of lets us do, um, or lets you do. And so the other party in this multi-sig cannot receive Bitcoin, but they can see that like they have a role to play. They can see that when the UTXO is funded, like they can like publish an attestation.
Mhm.
So basically the key to safely wrapping is not having bridges, but having attesters that are just running a Bitcoin nodes and ETH
Mhm.
nodes. And they say, oh yeah, like I see that UTXO is funded. I attest to it. And because these are on-chain signals, like anyone can verify that. But these 15 node operators, and we work with the 15 largest node operators in the world,
Mhm.
like P2P, Everstake, Chorus One, Hashkey, like all the big ones, and OKX. And so they just happen to be running these Bitcoin and ETH nodes and say, oh yeah, that Bitcoin UTXO is funded. Okay, now you can go ahead and mint, and so on. If the attesters like lie or collude or something, they, because they can't receive the Bitcoin, they can mess with the system, but they just can't steal. So that's why we call IBTC a theft proof
Mhm.
protocol. So it's like a kind of a reduced version of what like a lot of people have built bridges, and this is like a reduced version
Yeah,
of
it's
that.
like kind of like a multi-sig, and you need both signatures to do it. And they have half the signature, but they can't do anything with it unless you sign it as well. So
Exactly.
you know what this reminds me of? Not, I mean, this reminds me of Satoshi actually had an idea in some of his
Hmm.
initial posts for like, I think it was like basically purchases and without like a middleman. And it was
Mhm.
very similar with Bitcoin. What he wanted to do was essentially you have a buyer and a seller, and what happens is the buyer, instead of just sending the funds to the buyer, I mean the seller, and hoping that the seller sends the goods or services, um, what he wanted to do was have an escrow contract. So this is
Mhm.
like, which is not a person, and it's the same concept as what you're describing to me right now.
Yeah.
I wonder if that is the origination of this whole idea of DLCs. But what he wanted to do was essentially say the buyer's going to send the money to this escrow contract where there's the two. It's a multi-sig wallet essentially, and the seller and the buyer both have a key, and the money can never go back to the buyer, but the money cannot go to the seller unless the buyer and the seller sign it to send to the seller. So basically,
Yep.
there's no game theoretical advantage to the seller, from not sending the goods and making a transaction. But I guess people didn't like it because he could screw over the buyer. The buyer could just never get his money back if it didn't work out. Does that make sense?
Yeah, yeah. This is, I mean, basically without the same, the like different setup, but yeah, this is
Mhm.
like escrow. I used to call it an escrow, but I stopped doing that because with escrow in traditional finance, you have like an escrow provider,
Yeah.
and I didn't want people to think we're the escrow provider because
Mhm.
we don't get any Bitcoin, we never get custody, we don't, like I don't want anyone's Bitcoin. I'm not a counterparty to
Mhm.
anything. We just make software that let institutions lock it with themselves and manage it on their own.
So
So
what's your business model in this? You're charging the institutions essentially for the software to run the attestation
yes,
software.
yeah. When
Okay.
when they mint and burn IBTC, we take a fee.
Oh, okay. Gotcha. Gotcha. Okay.
Yeah. So it's we just run the attester network, or well, we don't run the node. We run one node, but the
Mhm.
other 14 are run by others. But we administer the IBTC attestation network, which is a DLC Oracle layer, which means we're actually not a crypto company. We're a SaaS company. We're just a Delaware software company. We make software that companies use if they choose to, and if once we verify their KYB and we verify that they're legitimate companies, then they can permissionlessly mint and burn IBTC whenever they want to. So it's a pretty neat system because in contrast, a lot of the other kind of bridge companies, they actually receive funds, and that to me that just I didn't want to have that responsibility. I mean, imagine you
Yeah, you
receive
have
like a bunch of bridge funds, and one, you're
custodial.
subject to regulatory,
You're a
and two,
custodian. You're
what
essentially a
if you're
custodian.
kidnapped?
Yeah, yeah. You're essentially a custodian.
Yeah,
So you have
yeah. I
to,
didn't want to be a custodian.
yeah, smart.
Yeah.
You've mentioned that building on Bitcoin is 50 times harder than other chains. What specific technical challenges has the team overcome?
Oh my gosh. Yeah. So so I've been writing code for over 30 years. I
Mhm.
know I don't look it, but I'm 40 this July.
Oh,
And
you look
I was
younger
a
than that.
nerd growing up. Um so I can like hang with, whatever, Scala, whatever, like Go, But what
Mhm.
I didn't expect, the first thing I didn't expect is ideology.
Yeah, there's
Oh
a lot
my
of
gosh,
ideology in
in
this.
this industry.
It's kind of crazy. Yeah, I am a like Bitcoin first, like understand the value proposition of Bitcoin, but I am not a maximalist or anything like that. So, I'm a technologist and a futurist, and there's other blockchains are useful for other things, right? Like if I want to store my life's wealth and savings, like Bitcoin is the place to do that. But like to try experiments and do all this other stuff, like, it's like people think like, you got to me, it's the analogy I always use is like you got bikes, you got planes, you got cars, right? Like, could I take my bike to California? Like, I could, or I could just use the plane, right? It's like if I want to go to the gas station, like, that's 20 miles away, I guess I could ride my bike, but my car is going to be a lot better. Could I take my plane there? Yeah, but it's going to be terribly inefficient, right? So, the script programming language on Bitcoin, people are always coming to me and say, why do you want to build everything on Bitcoin? Well, because it's not ideal for that. I mean, it's you've got natural barriers to that. The programming language just isn't there. It's made to, you know, not store a lot of data. Do what it does very very well. TikTok every 10 minutes, have a block, make it so anybody in the world can run a node. But like if you want to build all this fancy stuff, like that's not going to work on a Bitcoin node. It's just not. It's it only stores so much data, and you want more people to run nodes, and that blockchain is producing that small block every 10 minutes for a reason, so anybody in the world can run that node and verify their money essentially, right?
Yeah, totally. And I'm glad you said that Bitcoin first. And that was one of
Yeah.
the first blog posts I wrote is like Bitcoin first
Mm,
versus Bitcoin maxi, which,
yeah.
like if people are Bitcoin maxi, it's fine. But it's kind of like, to extend your analogy, it's like you got planes and, trains and bikes and stuff. But let's say someone's Amish and they're like, well, I want to go to California, but I'm going to ride my bike. I'm like, okay, like, I'm not gonna, like, who am I to judge
Oh yeah,
their
go for it.
beliefs?
Build it if you want to. I mean,
But like,
for
but
sure.
people are so they're so loud
Yeah.
about their
Yeah.
beliefs. And I love hearing crypto beliefs because people say like, oh, it's definitely going to be like this or that, or like, oh, in
Mhm.
5 years or in 10 years, or nobody knows anything. We
Mm.
don't know what the Bitcoin price is next week. We don't know what's going to be built in 5 years. Like nobody knows anything. So like all we know is if we're entrepreneurs, we're builders, we're experimenting, we're going to try a bunch of stuff, and customers, the market will tell us, what works and
Exactly.
what
And
not.
that's you hit the nail on the head, right? The market will tell us. And I think a lot of Bitcoin maximalists lose sight of that, right? It's like the market will tell you, right? It's like Peter Schiff, the guy who's saying like Bitcoin's going to be worthless, all this stuff. It's like, dude, the market's been telling you for 15 years that you're wrong. So same concept, right? Like the market will tell
Yeah.
you if these other chains are gaining TVL, and they're gaining more users and more wallets. I mean, there's more adoption happening. I mean, the market is telling you that people find this useful. And as somebody who's used all these different chains, I can tell you that I use them for different things and I enjoy certain aspects of them. And not everything has to be money, right? That's another thing I focus on. Bitcoin to me is digital gold, digital savings, digital, this borderless money, protect my purchasing power. And it might be different things for others, right? I mean, like, but that's the fundamental characteristics that I see, and that will never stop being useful. And it is the most important thing. It's just not the only thing.
Yeah, totally, totally. And then so like yeah, so the first thing I ran into were like some of these like moral arguments, like
Mhm.
this is evil or immoral. And I'm like, dude, your Bitcoin does not know that you own it. Like your Bitcoin doesn't know you exist. It's like just software.
It's a
So
tool, yeah.
so that was like a kind of a personal emotional challenge because I also don't want to be disrespectful to any set of beliefs, but I am also not going to argue with people, whatever. So anyway, that was interesting. I didn't expect that in the beginning. And the same from not just Bitcoin, but same from ETH or Solana heads or whatever. Everyone's got their like their right, pumping their bag and
Yeah.
so, yeah, I get it. Shilling their whatever project. I get it. The other thing is just Bitcoin development is extremely technical. Like I didn't know. I mean, I kind of try to be a technical guy, but like apparently there's like various versions of so the technology that lets us do what we do is called Schnorr signatures, which were added with Bitcoin's Taproot upgrade 3 years ago. But I didn't know there's like different implementations of Schnorr. And
Mm,
I'm like, what?
interesting.
Like there's different implementation, and I'm not on the engineering team here, so I only hear this from my co-founder, but like there's so many like DLCs were originally imagined to use something called adapter signatures, but hey, it turns out nobody uses adapter signatures, so we had to engineer in other ways. So there's a lot of things where, like, I like to say the white paper 6 years ago, the DLC white paper, kind of it laid out a math formula and an idea and kind of like a direction, like, oh, it could be used in this way, and some people took it literally to basically like, oh, it must be that, like the white paper talks about a sports bet between Alice and Bob,
Mhm.
and then people literally built a sports bet app with Bitcoin. I'm like, well, okay, but like, I mean, I guess I could see someone maybe use that, but like that doesn't seem like people seem to be taking loans on this thing, not like sports betting. Like, what are the odds that two Bitcoiners are going to make a sports bet? Like, I don't know. So like, it just there's yeah, but anyway, there's just like practical challenges, and that's kind of the in R&D, that's the difference between research and development. Like, research is like theory, and development is how do we implement it in practice? Like, how do we get this into Fireblocks? How do we get it into BitGo? How do we get it into, XRPL chain, which doesn't isn't even a chain. They don't have like they have like some API system, and like, so like the actual like implementing. So we actually have a blog post. It's probably our least frequently read, but it's like, here are 4 things we invented on the way to taking the DLC idea into IBTC today. And there's just like these practical trade-offs, which one of them, and maybe the big one that's defining for us, is that like usually in crypto, retail can mint. So like stETH or whatever, LUSD, like it's like boom, you create this software, everybody can mint, off it goes. In our system, we only institutions can mint, and that's because what we're really building is like USDC for Bitcoin. So go back a few years, you have USDT Tether. It's collateralized by, famously someone said cocaine and hookers, but it's collateralized by like trust me, I don't know, it's collateralized by the Tether people, and they know how much they have and whatever. And of course, people use Tether, and it hasn't
Mhm.
blown up yet, but you never know.
Well, I think
And
recently they
then
made a lot more. I think did they hire was it Cantor Fitzgerald with Howard Lutnick who's coming in as the new commerce guy? Isn't
Mhm.
he like weren't they doing like their attestations to verify that they actually had the funds to back it? And apparently, I mean, it's kind of hard to mess it up now with how high interest rates have been. I mean, they're just printing billions of dollars. So like
Yeah, they have a lot of money, and they've definitely like
Mhm.
gotten better and whatever. So I'm not hitting on Tether, but on the other hand, like you never really know, like if it's it cannot if it's something that's an underpinning to so many economies and it's
Mhm.
held by a team of 12, and we don't know. And I mean, not to be like all negative, but what if the team of 12 are kidnapped and tortured? And like, does like some terrorist get all the money? Like, how does that all work? I don't know.
Yeah.
So basically, like, so then USDC came along where they're like, hey, guess what? Instead of one place, we're just gonna have some banks like SVB, Wells Fargo, whatever,
Yeah.
and they're gonna back this asset, and then you can use it, and you're kind of relying on SVB's risk management practices to make it not blow up. Which ironically, then of course, SVB kind of did blow up, and the token depegged, but it only depegged to the amount of SVB's fault in the
Mhm.
whole thing. So the other components
Yeah.
were there. And so basically, that's our thesis with Bitcoin. Like, if we have a whole bunch of institutions, I don't know which one's going to go bust. Is it like the biggest one, the smallest one? Like, how do I know? Is it the one in Asia or one in US or what? No one can tell you which institutions present how much counterparty risk. But if we have a bunch of them, that diversifies the risk, and then the whole platform can really scale, and like really scale past like what traditional Bitcoin five people imagine. Like
Mhm.
right now, like you've got like a couple 100 million in some protocols, and you've got whatever 10 billion in WBTC, but you've got hundreds of billions of Bitcoin that could be used in an IBTC system.
So why not let individuals mint as well? So like why did you want to stick just to those institutions?
Yeah, because individuals are not trustworthy enough. The counterparty risk is higher, especially if they're anonymous. So, like, let's say you have, let's say like USDC,
Mhm.
let's say they had like SVB, Wells Fargo, and like me,
Hmm.
what if I go bankrupt, or if I go to jail, or if I just disappear? What if I lose my keys? Then
But aren't you locking your own Bitcoin? So like, how would it, wouldn't it just, that Bitcoin would now live forever on another chain? What does that matter?
so if I lock my Bitcoin to mint IBTC and I like take a loan and it gets
Hmm.
liquidated and goes to you, now you're holding
Hmm.
something that's backed by my reserve.
Hmm.
That's basically the design. So that means IBTC is not a trustless model. None of them
Hmm.
are. We believe it's trust minimized, but it's
Hmm.
trust minimized counting on a federation of institutions. And the more institutions the better, honestly. So the risk just goes down as we onboard more, we call them merchants. But that to me is seems, unless we have something that ends up being even more native to Bitcoin,
Hmm.
that's like a complete Bitcoin native fi. But on the other hand, that hasn't happened yet, because it's like Aave, Morpho, whatever, seem to be doing a lot, like they're doing tremendous amounts of volume and liquidity, and they're going to do even more. So I'm like,
Hmm.
okay, like assuming that Aave and etc. are the winners for like the to be the venues where lending happens, and GMX and Perptex is like hyper liquid. They're the venues for trading, and like assuming that it's going to be not just Bitcoin, but the DeFi actually is this whole constellation. We will always need to wrap Bitcoin, but we do need a way to secure the Bitcoin natively. And because you can't do it on Bitcoin by definition, you have to have something there. And so we chose these large institutions as the something, because they have compliance and risk and security, and like they just have like more they're better custodians individually, and collectively they're stronger than just trusting one.
So let me look. I'm trying to think through like any systemic risks or understanding the limits of this whole model. Um, the idea is that in order to mint IBTC, I need to be an institution, and I need to
Hmm.
an institution that holds the actual Bitcoin, and I'm going
Hmm.
to lock that Bitcoin in my own wallet, and then I'm going to issue the IBTC on Solana or Ethereum, right? Say I want to
Hmm.
put it in Aave to lend or do something with. Say I go under as an institution, what now? And then someone else acquires that IBTC on Ethereum,
Hmm.
and they want to redeem it for on-chain Bitcoin. What happens?
Yeah. So this is the risk. So let's say you have like five merchants, one of them holds 20% and they go under. For some amount of time, that 20% cannot be redeemed. Like the
Hmm.
other 80% of IBTC could be redeemed by the other merchants.
Hmm.
If you like, let's say like there's a total panic, a total sell off, IBTC goes to zero, people are completely like they reject it as a,
Hmm.
as a backing or whatever. All the merchants can get that 80% back, burn it, even if the value is zero, it doesn't matter. Whatever the value is, you can burn the IBTC, they get their Bitcoin back. But that 20% won't be redeemable until that comes out of bankruptcy, basically, until
Hmm.
that like company reemerges, or some private equity buys them, or bankruptcy judge orders the keys to be used in redemption or whatever.
Okay.
So that's sort of yeah, that's like the failure case.
Hmm. Interesting. Interesting, interesting. So everything you look at it, anytime you're looking to gain yield on something, I mean, it's important for our listeners to realize that you're taking a risk, right? If you're getting an
Yeah.
APY, that means that there's some risk involved, right? So
Yes. Yeah.
just to understand, what a more advanced thought process is on all this. Me personally, like I'm not going to take all of my Bitcoin out of cold storage and you know throw it on a DeFi protocol, buy WBTC or IBTC or any of these wrap protocols.
Yeah.
But I do want to get yield on some of it, right? I might take 20% of it and say, hey, I'm going to split the risk here. Every setup and scenario has different risks. So I might buy some IBTC, I might buy some WBTC, I might buy some CBBTC, right? And then I can put some in Aave and some in a different protocol and some over here, right? So then I will collect some yield from that, right? And to be compensated for that risk, I'm going to hopefully try to increase my Bitcoin stack over time, right? Maybe one of them fails, but after 4 or 5 years of me getting that 6%, I've made more than I would have, right? So this is some interesting rabbit hole to go down.
It is, and you and me and we're all like small players in
Mm,
this game. Like we all, in order for you to trust Aave and trust IBTC or CBBTC, or so you have to like evaluate a lot of things. I'm not sure if retail wants to or can do that, but that's also part of the, because we work with
mhm.
institutions, the institutions, are in the business of evaluating systemic risk
Yeah.
and, synthetic assets. And like
Mhm.
they literally, this is their whole job,
Yeah.
and they have like tech teams and
Mhm.
stuff. And there's a lot of money on the line. So if an
Mhm.
institution, or if collectively all the institutions look at this and they're like, hey, you know what, that's like safer than WBTC, that's all we want to accomplish, then that
That's your
the segment
competitor.
of the market,
Yeah.
yeah,
Yeah.
and then they can offer it to their clients, so that
Mhm.
the asset managers there can offer these Bitcoin yield products,
Mhm.
and then they can answer questions like, should I do like,
Yeah.
mint over this L2, but they're giving points, or do
Mhm.
that, there's a whole, it just unlocks a whole like
Yeah.
next level of it, of capability.
Yeah, no, I mean, this is like the Lego blocks of the future financial system that's going to be built, right? So Bitcoin is going to play a major role in that. And people just think like, oh, I'm just going to hold my Bitcoin and that's it. Like, no, people want to get yield on their assets. There's still going to be loans and banking activities, even in a more Bitcoin focused world. And I think this is all part of that.
Yeah, I think so. I think so. And that,
Mhm.
like, that's what gets me,
Mhm.
like that's what wakes me up in the morning.
Mhm.
It's a 10-year commit for every
Yeah.
journey. My last company, not to bookend it too much, but my last company, it took like 4 years to convince SEOs that this
Mhm.
like method was not like very powerful. And then somebody did a study and turns out, oh my gosh, like topic authority is the number one way to improve your SEO, because you
Mhm.
make the content better. So it's like I went through this whole journey of like introducing a new technology, like, and it takes a while, but
Yeah.
once not just people in general, not like general audience, but once specific decision makers who are empowered to evaluate, once like enough large companies do vendor analyses and find that our claims are substantiated by the cryptography, by the code, yada yada, then they, individually adopt it. And then over time, it just, and it might take a while, but my belief is it'll replace WBTC. Nothing against WBTC. It was a great invention 4 years ago,
Mhm.
but it's constantly hampered by this like single custodian
The Justin
setup.
Sun thing is
Um,
now another
and
layer to that.
yeah, yeah.
Yeah.
So I think this just kind of gives like a more flexible, more robust
I think
way to
it's
accomplish that.
amazing. And I think optionality in markets are key. Different ways of doing things are key, right? People are
Yeah,
like, why doesn't everything just happen on Bitcoin? Well, it's like, why don't we just have everybody have one car or one thing, right?
yeah,
There's
exactly.
different things. And I'd rather have different experiments, different products on the market. And that's what a free market ultimately does, right? That's prices this signal in the market and it tells people information. It conveys all of the little minute details into one piece of information. So I
Yeah,
think that's
yeah,
powerful.
and that's rare. Like
Mhm.
like this viewpoint that you embody too, which is great. Which is like this is what the world needs more of, because people, in absence of this, people kind of fall into like different like camps and cliques
Mhm.
and stuff. And it's like, no, like let's just try everything. Let the market figure it out. Everybody has, of course, there's a lot of different ways to like bridge or wrap Bitcoin. Everyone's pushing the,
Mhm.
differentiation of theirs. We are not the best tool for a bunch of stuff, but we
Mhm.
are the best tool for
For an
certain things.
institution
So
without
like,
custodial risk. I mean, that
yeah,
you have that niche and that makes perfect sense. And I also do think that individuals can participate in these things, right? You described
yeah,
a bunch of sophistication that's needed, and why institutions themselves might be better to handle certain aspects of it. But I know plenty of individuals who have done the due diligence, done the research, and if you're going to play in this game, if you're going to be involved in DeFi and all this stuff, like yeah, there's risk there, and yes, you're on the frontier of technology and financial innovation, but there's opportunities, and there's if you're willing to learn and put in the time, you absolutely, as an individual, can play in that space, right? I will say that. But for
totally.
95% of people, right? And this is the people that come to my Bitcoin meetup, that come to our blockchain meetups, and I talk to on a basis, it's, for you, for 95% of people, if you're not willing to like really dedicate the time and do the due diligence, dollar cost average, right? Find a couple assets that have value, that have network effects, Bitcoin, Ethereum, Solana, stuff like Chainlink that has a value proposition. These are the assets that I recommend is dollar cost average, and just set up an automated, allocation to that asset. All this DeFi, all these other things is like, you got to really put in the time and the work to understand that. And you're right. I mean, institutions that have all of these procedures and processes, they're already kind of playing in this game with TradFi, right? And a lot of this stuff over the next decade is going to it's going to come on chain. It's going to come on chain.
Yeah, and the financial system is more sophisticated or complex than
Hmm.
most people, including myself. Like I didn't realize all of this when I got into it. So it's interesting. Like the other day, where I was talking to the chief investment officer of one of the largest ETF issuers, and he's like, ran him through the whole spiel, and he's like, "Yeah, that's really cool, and thanks for like telling me. By the way, like." I'm not in a position to judge the statements that you said. Like, I don't know, but I listen to these OTC desks and these like trading companies. If they decide that your technology or your product is better, then we will use it.
Hmm.
But like we don't like, even though they're like a big powerful asset issuer, they just don't look at bridging technology. Like that's
Hmm.
not their specialty. They work with others who do. And so it's just like, yeah, individuals play an important role. And there's some really cool projects. Like I've been chatting with Bitcoin layers. They're doing a great job kind of doing like audit reports of the various Bitcoin L2s and stuff. Like these are great individuals who should be, commended in every way. But even in traditional finance, like it takes a village. Like it really takes a lot of specialists working together, and that's not a bad thing. Like I don't have a distrust of institutions just by nature. It like institutions are a way for a large number of people to organize,
Hmm.
work, and collaborate. But of course it's not blind trust, and that's why I'm like, well, you
Hmm.
can't blindly trust one institution because they all are susceptible to failure, even when they really
Of
feel like
course,
they're
yeah.
probably not going to fail. Like they still totally can.
Hmm. No, you're
So
not wrong. What do you? So you guys have a partnership with OKX and Chainlink. Can you tell us a little bit about that?
yeah, yeah. So Chainlink was our first investor via a grant when we first got started 3 years ago, and OKX led our pre-seed round. Chainlink, we have a lot more kind of technical connection to them because so we have these 15 attesters. I mentioned they're run by the 15 largest node operators, but anyone can verify the state of Bitcoin and ETH. So, but Chainlink proof of reserve, also can, of course. And so we wrap the mint and burn. We wrap Chainlink proof of reserve around it. Basically, like anyone can verify it, but if Chainlink verifies it, they're connected to a whole bunch of other stuff like Aave. And so a Chainlink verification is kind of worth more than like an average Joe verification.
Hmm.
So we use the proof of reserve product. That's been great. We have proof of reserve. We try to have proof of reserve on every chain where you can mint or burn. XRPL, which we're the wrap Bitcoin provider for XRPL, they don't have Chainlink yet, so we can't do it there. But they also don't bridge, so you can't mint on XRPL and bridge it over because they don't have any bridges set up yet. So like by the time they get the bridges set up, probably Chainlink will be there. So anyway, like we're closely aligned with proof of reserve. Also CCIP, which is their bridging technology. So you can bridge between different chains with CCIP. Cool thing about that is CCIP works with proof of reserve, which in a unique way. And so like typically when you bridge one token to another chain, you end up with these like, I don't know what they're called, but you like let's say you have USDC and you bridge it to Avalanche and it came
Hmm.
from ETH. So they might call it like USDC.E versus USDC regular.
Hmm.
And so anyway, because of this proof of reserve thing, CCIP can like check the reserve when they're bridging.
Hmm.
So we only have one IBTC contract on every chain. We don't have that .E or .A or whatever,
Mm.
which is kind of cool. So that's like a nice usability benefit. So CCIP is great for that too. Um, We also have we have a chaining price feed oracles, and the oracle also makes a call to the proof of reserve feed. So like the whole Chainlink ecosystem's just really cool.
Hmm.
We of course also work with Layer Zero and like all the other ones, and but just we just I think we are philosophically we're just very impressed by the Chainlink team, and we've
Yeah,
always
I'm impressed by the
just
team as well.
yeah, they're great. Yeah, they're just like super pro. And they also have this like institutional, like kind of long-term vision. So we're very
Hmm.
much aligned there. OKX, great exchange. I hope when we list on centralized exchanges, OKX will be one of them. They also run one of our nodes. I think we haven't had as much of a retail like interesting story. Like people come to our Discord, and I mean, we would gladly, send them all the content on IBTC, but we don't really like sell to retail that much. So it's sort of like just like there's only so much. So there's only so much that like OKX and Binance and these exchanges, have been able to do with us historically. But this probably is the year where that changes, because as we kind of grow and we get these institutions, we get the machinery working, like exchanges are going to be a key part of that. So it's great to have them on the cap table. But we also have like 15 other investment funds. There's some Bitcoin miners, there's some DeFi experts, there's all
Hmm.
sorts of stuff. So it's really it really takes a village on the investment side too. And now we're doing a deal with Cumberland, who wants to be our global OTC desk. So once we get in their OTC catalog, then they can service all the other institutions. That's pretty cool. We're talking with SWE around, SWE wants to build BTC-Fi yield products using IBTC. Um, Talking with Canton, which is Cumberland's private blockchain,
Hmm.
which is used by Goldman, Bank of America, etc. And they want to use IBTC to enable lending for these like
Hmm.
huge banks. Um, so just there's a lot of XRPL I mentioned that's kind of interesting too. So there's just a lot of like cool ways that Bitcoin can be used, and we're an infrastructure provider. We're not. I would even say we're not too creative in terms of like the use cases. But when customers come to us, like I was just talking to Coinbase Diamond earlier today. That's their institutional offering built on Base. And there's stuff we can do there.
Hmm.
There's stuff around green Bitcoin mining. We're working with Sustainable Bitcoin Protocol, SBP, to do like green mining, and there's like so many cool like
There's so many
anyway.
rabbit
This is
holes to
why
go
I love
down.
startups, because
Yeah.
like it goes in so many different directions.
Wow. So say I went on Uniswap and I just traded some ETH for IBTC. How would I, and then say I wanted to redeem that for Bitcoin? What does that process look like? Me as like a pleb, could I do that?
Yeah, of course. You can
Who would I go
either
to
swap it
redeem?
back on an exchange, either decentralized or centralized,
Uh huh.
or you can go out through a merchant. If you've onboarded to
That's
one
kind of
of
what
our merchants,
that's
like
kind of what I'm
Amber Group.
curious about. That's what I want to know about. Tell me about that last part.
Yeah, totally. And by the way, we also did not invent this system. This is called the merchant system. This was invented by WBTC
Hmm.
4 years ago. So WBTC can only be minted by there's like 25 merchants that are these institutions like FalconX, Cumberland Galaxy, Coin List, and so anyway, they are the minters of WBTC as well. So it's the same kind of thing. If you onboard to one of the merchants, you can go out with them directly, or you could do like OTC, or you could do it in a permissionlessly in a decentralized, or once we're listed on Sexes, you can do it on Sexes too. So it's just
Hmm.
sort of the same playbook.
Okay. Awesome. Sounds cool. What is?
And
Yeah.
now I'm sorry, one more thing. Now we partnered with Garden.finance, which is some of the people from the RenBTC team.
Hmm.
So now you can do a cross-chain atomic swap from Bitcoin on L1 into IBTC on L2.
I think you're blowing some
Um,
of our users' minds right now. Some of our listeners' minds.
yeah,
we're going
so
into we're
that's
going
really
into
cool.
DeFi degen chat now.
Yeah, totally. And so like that's where starts to get really rad. Like you could
Mhm.
do that through Thor chain. Theoretically, we're not listed there yet, but we will be. Like you do it through Thor swap and do it through Portal DeFi, like there's a bunch of other ways you could do that kind of interaction, but
Hmm.
Garden's very cool just because I believe they have a better or more innovative design for how they set up the liquidity pools. So anyway, yeah, like you can swap Bitcoin L1 and they'll like give you IBTC, but you still cannot burn, or they also cannot burn. The burning happens with like the Cumberlands of the world.
Gotcha. Gotcha. Let me take you to my next question here. Future predictions, Bitcoin, DeFi, institutional adoption. How do you see the landscape playing out over the next 5 years?
Oh man. I will do my best. I can only guess. I think institutions, I already thought 3 years ago, like institutions are coming, they're gonna like play a big role. Then the spot ETFs launched. That was already great because that got Bitcoin into a lot of like Wall Street TradFi, conversations. So that was super cool. And then when Trump got elected, I intend to be apolitical, but definitely the like the crypto positive leadership that are coming in with the Trump
Mm,
administration are definitely going to change things for the better, I think, in our industry. So that I think now in the US we're gonna start to like see a lot of progress. And the cool thing with this, I mean, the most interesting thing about DeFi especially is you can really go very far with financial innovation. Financial innovation sounds like, oh my God, CDOs and CDSs and all this stuff that led to the 2008 recession and blow up. So like, yeah, they can be, derivatives can be like, what are the financial instruments of mass destruction or whatever? They can be, but also like they can be, they can just be more efficient and better. And like and on DeFi, there's so many, I'm not an expert, but there's so many really interesting things you can do where like you take something and you split the principal and the yield and you trade them
mm.
separately as tokens on separate markets, and then you use one as collateral to borrow blah, and then you loop it. Like when you loop staked ETH to borrow, you borrow more ETH against the ETH, and then you like stake that too, and you like 5x your staking yield. And it's like, what? Like there's just so many cool things. So yeah, that's it's another reason we work with trading firms, because I feel
Yeah, it's
like they
wild.
have a better handle on what's like how much risk is too far.
Yeah.
Right now there's a lot of
There's
like
a lot of
points and
derivatives and
stuff.
all sorts of stuff being built now. Like, and this exists in the traditional world too, in a lot of ways with these, crazy derivatives markets, but all sorts of crazy, interesting technology being built. And, I'm here for all the experiments, right? Whether they work out or not. And, many things will fail and blow up catastrophically, right? But, you know,
Yeah. And I think another thing we're going to see is just ease, more accessibility, improved UX. Like right now, if you want to like degen DeFi, like you've got to really like go at it and go into this chain and that wallet and bridge here, and then like it's
mhm,
super
yeah.
complicated. But you can like, we can tokenize different yield strategies, something that works, we could just kind of like bake it into a single token, and you just have to buy and hold the token, and then you're exposed to that strategy. That's really cool.
Mhm.
I think that's going to be very powerful.
All right. Very cool. I'm going to ask you some personal questions now.
Sure.
So, I guess this is kind of relevant to business, but I saw you hold some patents for semantic analysis. Is that accurate? Can you explain what that
Yeah.
is? Tell me.
Y- Yeah, the way that by the time the IP attorney was done with it, like you
Mhm.
read it, it's gobbledygook. But basically, that was my earlier invention. Um, so I'll say this: I didn't know this before I got into startups, but there's like two ways of inventing something. One is you can invent the basic idea, like
Mhm.
Taj did with DLCs, and the other is you can invent the application. So the invention of using DLCs to create a self-wrapping system, that would also qualify as an invention. We haven't patented it because like why bother? Because anyone can like see the code. Like there's nothing like proprietary. We wouldn't enforce it or whatever.
Mhm.
In fact, I'd be happy if people like did more of what we do. But anyway, so my last company, that was also an applied invention. We were looking to model like, how do you take a bunch of articles and kind of pull out topical relevant, basically I'll just describe it because I've now brought it up like 2, 3 times. I haven't explained it. So if you want to write a great article about whatever, it's so like how do you get articles to rank on Google?
Hmm.
You do it through writing great content. What's great content? It's content that detailed, rich, informative, presents unique angles. Awesome. How do you come up with that content? So what my idea was, and our idea, I worked with an AI researcher, Richard Mala, and also a PhD, Gianni Yin, back in the day.
Hmm.
This was a long time ago now, like over 10 years ago. But basically, we're like, what if you just take like let's say you want to write the best article on Bitcoin DeFi or whatever. We could take like 10,000 articles off the internet on that topic and use a machine to read all of them and just basically give you an outline for
Hmm.
what are the most important topics and what should be mentioned in the article. Like Bitcoin DeFi should talk about bridges and Aave and whatever, like all the words we use. And it should like kind of lay out the arguments in such a way it should answer these questions. And so that's called topic modeling. When you take a corpus of articles and you extract topics and their kind of connections to each other. And that's what our patent had to do with. Basically, the way that we created this is we borrowed some techniques from another related field called automated query extraction, which is something that search engines do. Like when you go into Google and you say like put a few words and then it like pops out some other word suggestions to finish the phrase. So we took techniques from there, brought it into topic modeling, which as a field was created in 2003 with something called LDA, latent Dirichlet allocation. So anyway, we like took this thing that like was invented, made it better by borrowing from another related field, and then we just implemented the crap out of it. We built all these like different approaches to modeling topics and just
Hmm.
got better and better.
Ah, interesting.
Um, yeah, that was my last decade.
It sounds like a lot of work. It sounds super interesting too.
It,
Very
it
cool.
was it was and my dad's a big inspiration because he
Hmm.
was a scientist all his life. He invented 6 or 7 things.
Hmm.
Um,
I got to take you into our R&D lab when you're here.
Love it.
I've got an R&D lab over there where their guys are, my engineer is just unbelievable, inventing all sorts of crazy stuff.
Yeah, super cool. And it's like there's like 2 steps to it. It's maybe 3 steps. Like there's like the basic research, there's the development into a product, and then there's the commercialization of the product.
Mm,
And for my dad, because he came from, post-Soviet Hungary, he didn't know the marketing and sales and commercialization. So I was like, okay, well, let me just kind of pick up from where you left off. We'll invent stuff, but then we'll also take it to market. And that's what like endlessly fascinates me about,
mhm.
this kind of job.
Very interesting. Maybe you can help me take some of this stuff to market.
Sure. Yeah. I mean, I'd love to. Yeah. I'd love to advise, whatever that means.
Sounds good. Sounds good. All right. Here's a more personal question. So, as someone who's built successful companies in Web 2 and Web 3, what is your best advice you have for people, entrepreneurs,
Yeah,
builders?
I think that the thing that I didn't expect when I got into startups, because I was at like this like cushy VC job. Was it cushy? Not really. I had
Hmm.
to do a whole bunch of calls, like hit like KPIs and stuff, but it was, at least socially acceptable job. And then I left to become like, this like crazy poor entrepreneur. Um Disappointing parents and friends alike. But I think the thing that so if you're building something like that is really new or something that is just hasn't been done before, there's a lot of emotional, like weird behaviors that happen because in the beginning, it's very demeaning. In the beginning, everyone's like, oh my God, I can't believe you left your well paying job to
Mm,
like to suffer and to live and to eat ramen for years and years and suffer constantly. And also, like, you're really annoying. Why are you always talking about this Bitcoin thing? Nobody cares. Shut up. So like you kind of like lose when you become like a creator, you sort of like lose a little bit of tether to reality.
mhm,
But it is demeaning because it's not like you have to kind of go against the social grain. And some
mm,
people are fine with it, some people less so. But anyway, and it's also just like legit hard, like building new products and then like explaining it to people. You just have to like over and over and over, and then at some point like you start to get acknowledged, but it takes like 5 years. So there's like that's like one type of weird emotional state when you're like poor and suffering, and
Hmm.
it's called the grind.
Yeah.
And then there's another part when you start to become successful, and then
Mm.
you have to survive success, because then there's all these temptations like, oh, I should like party a lot, or I should like compromise on my ethics because I could get a lot more tvl if I let this one whale in who
Hmm.
like I know would normally, but like he's
Hmm.
really pushing, and or whatever. So like, so then they have to like, and then there's just a lot of yeah, like your self-worth kind of fluctuates with your business. And so the one thing I learned from having done, and then when you get VCs on the board, and I had 12 VCs on my last company, we had 7 on the board. And when 7 people are yelling at you to do X, it's very hard not to do the thing, even if in your heart of hearts, like maybe we shouldn't do that. But
Hmm.
everyone's like, do it, like, and you
Mm.
just like, so there's a lot of like board dynamics. And of course, VCs are also some of them are more ethical than others and whatever. So anyway, like you have to deal with that too. So like there's also that but basically the thing that I learned is in a business, even if it's a business you created, like it is absolutely not personal at all. Like it's not a reflection of your worth or your success or your lack of success or whatever. The business doesn't even like, it's just it like the business operates in a market, and maybe the market takes off immediately and you make a bunch of money, but maybe you make a bunch of money and you're unhappy, I don't know, or maybe you are happy or whatever. Like these are like completely, like hiring, firing people, that works based on the labor market, not based on if they're your friend or you like them or you don't like them or whatever. A lot of these things are depersonalized, and we have to like decouple our sense of self-worth from the creations. And then the business, like it either works out or it doesn't or whatever, or kind of works out. Like it's, like it's just you go on an adventure and you see what comes out at the end, and you learn some stuff along the way. And so I have less, yeah, I kind of have less ego attached than early on. I wanted to have like a big team, and I wanted to be the boss and be a manager, and then I got it. I got 50 people, and I
Hmm.
freaking hated it. I
Yeah.
hated managing 50 people. Like, so now we have 10.
Oh
you
man,
know
that was just some great advice and insights and thoughts about your journey. Before we wrap here, is there anything else you want to share with anybody, with any of our listeners? Any thoughts?
Yeah, I think you raised a really good point. I would, you raised a lot of good points, but one of the points you raised was that let's not underestimate the power of the individual in this game. And you know what? You're totally right. I do talk to trading firms a lot and whatever, but like, do the traders necessarily know all that? No, nobody really knows all this stuff.
Hmm.
So if someone is an individual, if they're listening to this, if they have like some questions or comments or anything, like please actually do engage me on Twitter. We have a Discord too, although it's kind of quiet, but you'll find me there, or on Twitter, or TG is just Aki Balogh. If someone sends, when people send me spam, I categorically ignore it. So it's not like don't, no, like don't like, I'm not asking people like pitch me their marketing services, whatever. But if you have like a legit question or
Hmm.
something, like I might be slow, but I do want to get back to everyone, because like, yeah, it's like somebody's idea. Usually ideas are not like fully formed. Usually like I have a hunch, or you have a hunch and you tell me, and then I'm like, oh, that's interesting. Well, I don't know everything, but what about this? And then like we kind of like construct it together. So I think you're right. I think the power of individuals in this Web3 world is actually one of its features
Mm,
that we should always encourage. So yeah,
I
and
love that.
if we're doing something wrong, or something, or not wrong but incomplete, like if I have an incomplete understanding, I love like a well-formed critique of anything that I said. So if anyone has positive or negative or constructive or critical, just send it along on Twitter and
Awesome.
or whatever, and find me. And yeah, I appreciate the feedback.
Aki Balogh, it's been a pleasure. Thanks so much for joining us today, and hopefully we can chat again soon.
Thank you. Thanks for doing this. This is great.
Happy New
Happy to
Year.
do it again. Take care.
All right, guys. Well, that was pretty good, Paul.
Yeah. Awesome.
All right.
That was fun.
Yeah, how long we go for? Hour 45?
Yeah,
What it shows on the bottom.
Yep, we're at
Wow.
145.
Wow, nice.
Wow. Very Joe Rogan-esque, which I appreciate because yeah, not so structured.
I'm glad that you feel that way. I try to that's obviously what I want to emulate, and there's some questions I want to ask, you know what I mean? But in the middle of it, we can go down whatever rabbit hole, right? It's like, hey, there's maybe 4 or 5 questions that I want to just kind of talk about a little bit, but then other than that, it's like got all this other time to talk about whatever, so hell yeah.
I love it. Yeah, I love it. And that's like I'm glad we're doing this now too, because the first 3 years I'm just trying to like figure out like who's our customer and where do we get our
Mhm.
funding and like just like really
Yeah.
basic things.
Mhm.
But now it's like I was talking, we have a community manager, Mike, and I'm like, this is a lifestyle. Like this is like my art. So I appreciate the chance to talk about my art, and you've asked really good questions, and I especially appreciate your Bitcoin first view of the world. I
Mm.
share that too,
Awesome.
and I hope we meet some others through this, through putting this out there. Like those people like you and me are very valuable. Like kind of um because it takes a synthesis of like a lot of different things to kind of like have a positive
Mhm.
slant on it versus like just like fear and
Mhm.
like ideologies.
Yeah, I mean, crypto is like a religion for a lot of people, right? So it's replaced religion or whatever. I don't know what it is, right? But yeah, there's some people have some very
It's a cult.
it's very cultish views on certain things, and in my mind, it's like, guys, this is a free market. Like, this is Austrian economics. Like, different competing currencies, competing things, right? Different value propositions. Like, the market's going to tell you, right? What is valuable, what's not. What the market price is a reflection of that.
Yeah, yeah. No, it is, and like it's a feature, but also sometimes people can um I don't know, like I especially having been like my last company I raised and lost like $15 million.
Hmm.
So I guess it would be nice to raise and make 15 million, or like to it would be nice to create value for
Hmm.
once maybe with this company. But like my relationship with money too, it's sort of when you're broke and whatever, like it's like of course all you can think of is like where am I gonna, but like after a while it just becomes like I really believe it's our art, it's our self-expression, and
Hmm.
like it's just good to, I mean, you set a really positive example by by thinking about it that way, which is I agree with, because yeah, nobody knows what crypto is going to look like in 5 years. I mean, we don't even know if like aliens are going to be among us in 5 years.
I
I
mean, I don't
mean,
know. They might be prepping up for something. It seems like there's some substance to all this, people in the government and these whistleblowers, and something's going on. I don't know. I mean, I just,
exactly.
I think maybe they know Trump's coming on the 20th, and he's gonna fucking put it all out there, right? And so they're kind of like, oh, there's these drones that are showing up right here, and oh my god, they're doing this stuff that defies the laws of physics. I mean, I don't know. Something's going on. Something's going on. But
Exactly. Like we have no, yeah, we like the future is more interesting, sophisticated, and weirder than we
mhm.
can anticipate.
I'm
So
here
it's good
for it.
to
I
be
love it.
open
I'm
minded,
here for it. I mean,
basically.
I hope we see some aliens. I mean, it's getting kind of lonely out here in the universe. There's all these trillions of stars and trillions of galaxies and all this stuff. I mean, we got to see something, you know?
Yeah, yeah, yeah. I'm sure they're awesome when we get
Yeah.
there. Or AGI. Somebody told me today, like 2025 is like the year of AGI.
Mm.
Like oh yeah, Sam, what's his name? Sam Harris or Sam? No, Altman said that this year we will have like AGI. Cool, awesome. Like let's see. Hopefully,
He also said
hopefully.
OpenAI was going to be open, but now it's closed. So I don't know if I take him at his word, but I mean, he knows more. I mean, you probably know more. I mean, you're on the cutting edge of all that. So
I-
are
I'll
you
have to, yeah, I
experienced?
have to look at the betting
Yeah.
markets. But yeah, I
Yeah.
mean, I
Looking at
don't
some
see,
poly
yeah,
market.
why not AGI like this year? Sure. I mean,
Yeah.
what is AGI? I mean, we're practically there.
We're
So
getting pretty
like,
close for sure. So this year, next
yeah,
year, the next 5 years, I mean, it's definitely coming faster than people expect.
who
So
cares? Yeah.
he's got the inside scoop, so he knows what's going on in his labs.
Yeah.
They've been trying to turn that thing into a for-profit company, so they know something's going on.
Yeah, exactly. Yeah. 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 The only thing I'm confused about is like, why does Andreessen need more money? Like, I'm just always confused by. I'm not saying it's bad. I'm just like it can't be like when or Elon Musk or whatever.
Mhm.
Like it can't be about the money, but they do make a lot of choices. Like Bezos, like he like tapped out. He's like,
He's been
I'm
hanging
I'm
out on
just
his
gonna
yacht and
party.
working out, doing stuff. He's going through his midlife crisis right now. I think I like this. This is a
Mm,
better version of Jeff, in my opinion. So
yeah.
let the man rest a little bit, do his thing. He'll probably come back and try to maybe run for office or do something. Right? He'll figure something out. He's in his little midlife crisis. He's doing his thing. He looks good too. He's jacked. You see him? He's like built up. He's on the boat.
Oh,
You know.
nice. Yeah, and yeah, you're right. Actually, he might come back and like
Yeah.
just like do like the next big move or whatever. Like I don't know. Yeah, it's I don't know. I feel like I'm ranting, but yes, very very interesting. The future could be whatever we make it to
I love
be.
that.
Sweet. Well, this has been great, man. I
Yeah,
appreciate
for
both of you
sure.
guys. Thank you for finding me and
Absolutely.
for letting me ramble. And yeah, I'd happily visit you in Naples. If you're ever up in New York too, hit me
Yeah,
up.
sounds good. I usually go up to Lake George once a year.
Oh, beautiful. Wow.
Whereabouts in New York are you?
I'm in Brooklyn, in
Oh, you're
Fort
in the
Greene.
city. Okay, all right, gotcha.
But I'm only here about like half the time. But
Mm,
it is kind of an interesting career because I'm either here or in Abu Dhabi or Hong Kong or Singapore,
interesting.
or like literally in my office or like my apartment. Like
Mhm.
these are like the four locations where you'll find me.
All right. Well, it was a pleasure to talk to you, bro. Nice to meet you, and
You too.
let's do this again soon for sure.
Sounds great. Keep in touch.
If
Ping
there's
me
some,
anytime.
yeah, if there's something you got going on or an announcement you want to get out or whatever, I mean, you come on, we'll talk about it. New technology, new breakthrough, partnership, whatever it may be, we can do another, episode
Yeah, I
recording.
guess. I mean, the big thing for us this year is going to be building some trading products. I mean,
Hmm.
we're not traders, but we
Hmm.
can definitely build some like tokenized yield products because people are like, oh, like really cool. You got this safer infrastructure, but like, how about some yield? And we're like, that's a good point. Like, we did build this to give you yield. So we're going to build like some Bitcoin derivative products. We have to kind of like learn how to do that. But I mean, others like Athena have done it, so I'm sure we can figure it out.
Mm.
But yeah, I think once we have a product, because people are like, "Oh, this is cool. How can I use it?"
Hmm.
And like, you can swap into IBTC and earn points, but it's not like I don't know, like it's not like what we like live or die on, you know.
Hmm.
But like, if we can deliver a safer yield product that then you would actually be a great judge of that because you've seen a lot of things and you've got like what you said you've got most in cold storage but you might like speculate with a
Hmm.
small part of it
Hmm.
and like yeah, once we have like a something I'd love to show you and get you both of you guys' thoughts on like pros and cons, fears, whatever. Because when we talk to companies, they're like, well, we just want a 5 to 6% APY, but safe. Like it can't be like
Hmm.
magic hands or like points or like it's got to be
Hmm.
like something just like really like legit.
Hmm. Okay. Yeah,
Definitely.
So
we'll talk about it.
Awesome, guys. I'm
All right,
gonna
boys.
keep most of this last portion in because it was fun.
okay, sure,
You do whatever you want.
All right.
Hey,
sure.
Paul, is there a way you can get it so like we have like a banner that might show like our logo on here and it'll show his logo and has his Twitter and my Twitter, like my name, our names listed on the
Yeah,
actual
I
thing?
can include some of that, no problem.
Okay.
But of course, everything will also be in the description.
Okay.
Yeah, going forward, we can have the whole CNN flashing, flashing, headlines and all that.
You
I'll-
heard it here first. Aki believes Bitcoin's gonna probably go up.
Yeah. Yeah, I'll take that to the
Need
bank.
the chimes and everything. All right, Aki, thank you for your time, brother.
All right,
Thanks, guys. It's been
Been a
great. Have a great evening.
Happy
Happy
New
New
Year.
Year.
You too. Thank you.